is the outcome of a budgetary control. Budgeting generally is a translation of the plans of organization into financial projections that facilitate planning, resource allocation, and controlling the activities and controlling the activities. So what we are saying is that for public sector organizations or entities to be able to achieve their established goals or whatever mission for which they have established, they have an objective to achieve. This objective must be achieved by using resources. And we all know that these resources that are available for these organizations to achieve their goals are limited. Therefore, the budget is a control tool that will help managers to be able to allocate the scarce resources, because the resources available is scarce. So it will help them to allocate these scarce resources and to ensure the judicious use of these resources. And so generally, we are saying that budget is the outcome of a budgetary process, because when we say budgetary process, it's a process that we go through in coming out with a budget. So budget is the outcome of the budgetary process. Okay, before you come out with budget or before you have a budget, processes might have been steps might have been taken to be able to come out with the budget. These steps or processes you go through in coming out the budget is what we call the budgetary process. Right. So we said budget is an outcome of a budgetary process the budgeting generally is a translation of the plans of an organization into financial projections. So the organization has been set up with an objective or with goals, and these goals are plans or targets or something they want to achieve. So definitely they are plans. Now, if you translate these plans into financial targets, that's your budget. So, for example, at the beginning of the year, you have estimated to, let's say, build this, provide services, this, have a lot of activities you want to undertake. Now, the financial aspect of these activities you want to undertake becomes your budget. So it means that you actually estimate amount of money that you are going to use in executing whatever activities you have planned, so that when you finish executing those activities, you'll be able to achieve your organizational goals. Organizational goals are the goals for which this organization has been set up for. Therefore, when they want to actualize these activities, they will have to estimate amount of money that they will require in executing these activities. So these are the financial plans. Do you understand me? So we are saying that the budgeting is generally a transaction of the plans, is a translation of the plans of an organization into financial projections that facilitate planning, resource allocation, and the controlling of activity. So take note, we are saying that budget is an outcome of a budgetary process, and that budgeting is generally a translation of the plans of an organization. Let me just underline that one for you. So we are saying that budgeting is generally a translation of the plans of an organization into financial projections, right? Because whatever you want, whatever you want to do, you want to know how much money am I expected to use. So it means whatever activities you want to do, the financial projections of this activity is what we call so it is a translation of the plans of an organization into financial projections that facilitate planning, because once you have done the projections, it will help you to then plan resource allocation and controlling of activity. In order to ensure, in order to secure the desirable outcome from the budget, they should have the qualities being specific. So what we are saying is that in order for public budget in the public sector to be achievable or to be desirable or to come out with a desirable outcome, such budget must have qualities of being, one, specific. the budget must have the following qualitative characteristics. That is specific, measurable, motivating, and support of all members that should be involved in their development, implementation, and evaluation. Take note of that aspect very carefully. For a budget to be successful, for public sector budget to be successful, in order to secure the desirable outcome from that particular budget. So we are saying that for a budget to be successful in the public sector, it must have the following characteristics. One, it must be specific. Okay, so how much money do you need to execute a particular activity you want to undertake maybe in the coming year? 10,000, very specific, right? It shouldn't be we need somewhere about something about, so no, in budgeting there shouldn't be something like about, no, be specific how much you need for the various activity. Come out with realistic estimate so that you'll be able to be actually know. The budget must be measurable. Okay, whatever amount of activities you are going to do for which you have budgeted for, you should be able to measure it in terms of money, in terms of the outcome you want to achieve. Then it must be motivating. Of course, budget must be motivating enough to be used as a tool for control purpose. Because if the budget is not motivating here means that it must be set on a realistic target, such that people who are working towards achieving that budget estimate will be able to do that. If you set budget too high to be unrealistic for it to be achieved, it cannot motivate the people who are involved to actually work towards each achievement. Okay, so it must be motivating. It must be set something that will challenge the workers or the employees to work towards achieving it, and it must not. So what it means is that the target must not be too low, so that the employees will easily beat it. Neither must it be too high, so that no matter what they do, they cannot achieve it. So we'll talk about that later. Also, the budget, for it to be successful or for it to actually secure the desirable outcome, must have the support of all members that will be involved in their development as well as their implementation and evaluation. The budget must be, first of all, developed by people who are going to actually implement it. So those who are involved in developing the budget and are the same people who are going to involve in the implementation of the budget and the same people who are going to involve in the evaluation of the budget must all give the budget a support. If some people think that the budget is said that they cannot give support to it, or if some of the managers do not agree with the budget, then the budget will not work. It will not yield any desirable outcome. So that is it. Then budgeting is difficult in the public sector because of the difficulty in defining quantifiable budget activities, budget objectives, and output. Unlike the private sector, where exact things, what we want to do, are very clear. Public sector budget are most at times for political promises. Okay, so sometimes the budget we are estimating for this particular political promise might not be exact, because we don't even know how the real estimate for such amount. So we are saying that budgeting in the public sector is often very difficult because of the difficulty in defining the quantifiable objectives and outcome, because these organizations are to provide services, and their services that they are going to provide, we don't know exact. We cannot know exact target for which they have to provide. Unlike the private sector, where giving manager can be given a sales target or production target or certain other targets which are very clear. In the public sector, because more or less it's a provision of services, how much provision of service you give sometimes determination of that becomes difficult. So in making estimate for this, some of these results are difficult in public sector. So public sector budgeting is the process by which, so now we are talking of the public sector budgeting. So public sector budgeting is the process by which the public sector goes through the preparation of final plans that facilitates the implementation of strategies for achieving objectives of an entity in a budget period, in a specific period. So this is the definition of budget. The public sector budget is the process by which the public sector goes through, in the preparation of the financial plans that facilitate the implementation of strategies for achieving the objective of an entity in a specific period. So the government comes to power and has made some certain promises for a given year. So these are put in their plans for the year, and therefore amount of money that the government may need in order to implement this political campaigns or whatever plans for the academic period is what we call budget. So it is a process by which the public sector, you can say public sector entities, goes through in the preparation of the financial plan, because the budget is a financial plan, right? Take note that we said budget is a financial plan, because whatever plan that you have taken to achieve in the budget period, you will translate that into quantitative form in terms of money, and that becomes a financial plan that facilitates the implementation of strategies. Because once the strategies are goals, long-term goals, or the plans you want to achieve in whatever period. If it's a government, maybe in a 4-year mandate that have been given to the particular government, whatever strategies they want to achieve, whatever strategy they want to implement within that period, is they will put this down in a budget. Sometimes we have medium plan, or we have the medium term and long term plans, or short term plans, okay, whatever. So public sector budgeting could therefore be taken as the process of developing financial plans for central government. So because we know the public sector is made up of the central government, that is the MDAs, that is ministry, departments, and agencies, as well as the MMDAs, municipal, metropolitan, municipal, and these assemblies. So we can say that, in short, public sector budgeting could therefore be taken as the process of developing financial plans for central government, which is MDAs, and the MMDAs. And the budget generally could cover the various sources and application of state funds. So the budget will cover all government funds we want to achieve, we want to get in the given period, and how these government funds are going to be spent in the period. It could include all the taxes that the state plans to collect. So when it comes to the budgeted revenue, all the taxes that we want to collect from the taxpayers in the period, total amount of grants that we envisage to receive, if the government expects to receive grants from donor agencies, or let's say bilateral organizations, or even other governments, then that will be part of the revenue. Okay. Loans that should be will be contracted for a period. Okay, so in terms of the revenue, the tax revenue that the government has made estimate or budgeted to receive from the people from the taxpayers, yes. Then grants we want to receive from other donor agencies, even donations, and then loans that government intend to contract to finance its activities. So we take loan from foreign countries, IMF and others. Then we can also talk about the expenditure side, which is the compensation for all public sector workers, compensation for all public sector workers, because it's the government that budget for people to how much to pay to people for compensation for all those people who are working for the government or the public sector. Goods and services that the government wants to acquire during the budget period, assets to be bought for the period, etc. So even though budgeting in public sector is similar to that of a private sector, it is a complex activity for the private sector, given its size relative to the private sector. So what we are saying is that if you look at the things that we have talked about, when we talk of public sector, then we may generally say that it is a budget, it's a financial budget prepared for the MDs and MMDs. And this will cover the revenue we want to get, how much money we want to get from taxes, from grants and donation, then from loans, as well as the compensation for employees, the goods and services government want to purchase, as well as other things that the government want to do. So you can, if you look at the public sector and private sector, the public sector budget is very, very bigger, very complex, involve a lot of activities, unlike the private sector, right? So the preparation of the public sector budget is the responsibility of the Minister of Finance. Take note of here, for objective purposes. We are saying that the preparation of the public sector budget is the responsibility of who? The finance minister, right? Even though he'll be assisted by the director of budget, who is responsible for the current, who is responsible for the central budget agency, which is the central budget agency, which is the CBE. So the preparation of the budget, the budget for the country is the responsibility of the Minister of Finance, but the minister is assisted by the director of budget, who is responsible for the central budget agency. So if you go to the Ministry of Finance, there is a director of budget, and he is responsible for the central budget agency of the ministry. The responsibility of these state officers and agency with respect to the preparation of budget for the state will be discussed in the subsequent question. So we have the responsibility of the Minister of Finance, the Director of Budget in the subsequent listen. Even if you have looked at the provisions in the Public Financial Management Act, we have the Chief Director or the Budget Director of Budget, as well as the Minister's responsibility specified in there, right? But in Unit 3, we shall discuss that one too again. So take note that we are saying that the responsibility of preparing budgets in the public sector is the responsibility, is the duty of the finance minister, but who will be assisted by the director of budget at the ministry. Okay. Now let's look at features of public sector budgets. Features of public sector budget. The following are the distinguishing characteristics of public sector budget. Now, if you look at the public sector budget and the private sector budget, there are differences. So if you have done budget in any other course, maybe in management accounting, or you are going to do that one in management accounting, you just suppose that with the public sector budgeting, you see that there are some similarities as well as what differences. Because when we talk of public sector, the dynamics is different and it involves a lot of things. So the differences are very clear. So learn what budget is in the private sector, which will be taught in the management accounting, but try to use that to understand what we mean by public sector here, right? So that in examination you can produce a very good. Let me just put my computer on power on, because very soon my computer is having some problems. So if I don't power, very soon it will go off. What? All right. Sorry for Mr. Burma. Right. So we are talking about the features of public sector budget. And so we are seeing that the following are the distinguishing characteristics of a public sector budget. The first one is objective. The second one is budget period. Then we have, please put these things down. So we have the budget objective, budget period. We are going to explain that one by one. Then budget preparation. Then we are talking of supplementary review budgets. And then public involvement in the public sector budget. And then budget regulations. So these are the characteristics of a public sector budget. The first one is the budget objective. For every budget must have an objective. For example, we are saying that every public sector entity or organization is set up with a purpose or with a mission, and from that mission they come out with their objective for which they have been set up. And so the purpose for which the budget is being prepared must be clearly defined and should inform the preparation of the budget. Public sector budget objectives are driven from the national interests rather than profit motive. Do you understand that? The general objective should be to ensure socio-economic development of the state. It should reflect the minimum term, that is through a 3 to 5 years development agenda of the state. So every public sector budget must have an objective, and this objective stems out from the purpose for which this budget is prepared, and this must be stated clear in the budget. Okay, so the budget purpose for which the budget is set up must be clear and defined, and should actually inform the preparation of the budget. We know that the public sector organizations are purposely to provide certain services to help development of to ensure socio-economic development rather than profit motive objective. So whatever purpose for which the budget must be prepared, or the budget must have an objective, and this should stem generally from the objective, which is to ensure socio-economic development of the state, and should reflect the medium to medium-term development plan. So most of the time, we look at the 3-year development plan budget. So that's why governments are giving 4-year mandates. So they come out with a 4-year plan, or sometimes 3 to 4-year plan. Okay, so or 3-year, mostly 3-year development plan. We call them MTEF, that is medium-term expenditure framework. Okay, so then we have the budget period. So that the period comes in here, budget period. Every budget must have a period in which it must be operative, it must be operational, right? So budgets are basically prepared for a defined period of time. But if it's a medium-term plan, then it might be 3 to 5 years. Okay, we can also have an annual budget, which is the budget prepared annually. But if we have 3-year medium-term budget, then we know what we have to do every year in the 3 years. So the one that must be done in that particular year becomes annual budget, which is normally read by the Minister of Finance at the Parliament, right? So budget can be prepared for any period. Budget period can cover any period, right? It can be days, it can be weeks, it can be months, or it can be a year, or it can be more than a year, 3 to 5 years. Sometimes it can even be long-term budget, which is the 10 years. That's why we call them long-term development plans, right? So we are saying that generally, public sector budgets are read for one fiscal year. The introduction of the medium-term expenditure framework, which we call MTEF, means that each year's budget must be supported with 3-year rolling plan outlining the general expenditure framework for the ministry, department, agency, or the government. So when we have the MTEF means that before you come out with a year's budget, you come out with the next 3-year budgets, so that we'll know how this year budget links to the medium-term budget, right? We call that one MTEF. But the budget that is read by the Minister of Finance is the annual budget. So budget period is a period in which the budget is going to be operational or implemented, or the budget goals are going to be achieved. And we are saying that this period can be days, it can be weeks, it can be year. But generally, the public sector budget are read, or the public budget is read for one fiscal year, which we know is done by the Minister of Finance. However, there's this introduction of the medium-term budget, which means that the year's budget is linked with, or is supported by 3 rolling plan outlining the general expenditure framework for the ministry. So if it is MTEF, then it means it would be 3-year budget. Then we have the budget preparation. Okay, one major feature is budget preparation. After you have determined the objective of the budget, you have come out with the budget period in which the budget is going to be operational. How then do you prepare the budget? The public sector budget may be prepared based on sectors within the public sector, which are then consolidated into the main budget, right? Because the public sector is made up of a lot of organizations, and before the national budget is read, all the sectors, ministries, departments, even the local governments, the MMDAs, all of them must prepare their budgets, and then this is put together to form the national budget. So we are saying that the public sector budget may be prepared based on sectors within the public sector. So we have the agri sector, we have the industrial sector, or we have the ministry. For the Ghana here, we have ministries. So the various ministries, sectors within the ministries, or the agencies within the ministries will prepare their budget. The various ministries will prepare their budget, and then the various ministerial budget will come together to form the national budget. So that is what we are saying, that the public sector budget may be prepared based on sectors within the public sector, which are then consolidated into the main budget. Sometimes each sector is supposed to organize the budget budget according to the programs that the sector plans to undertake for the ensuing period. For instance, in Ghana, the budget may be organized according to the MMDAs, the MDA, that is Ministry, Department, and Agencies, or the Metropolitan, Municipal, and these assemblies, that the budget relates, and at the same time, each MDA or MMDA is required to organize its budget according to the programs that would lead to the budget. Then the Commission on Human Rights and Administrative Justice has management and administrative promote and protect fundamental human rights, administrative justice, and anti-corruption as their key programs for 2018. So what we are saying is that the public sector budget preparation is done in such a way that the various sectors in the economy or the various ministries may prepare their budget. Even that, the various ministries or the sectors may prepare their budget based on the various programs that they are executing. And then this is put together as their budget for that particular ministry or sector. Then the sector's budget or the ministry's budget will now come together to form the national budget. Right. So, for example, the Commission for Human Rights and Administrative Justice, SHRAJ, they have the administrative aspect, which is a project, and they have also another project that actually see to the fundamental human rights and administrative justice. So these are different programs. So in their budget, they will bring the budget for the administrative aspect, the budget from the ensuring human rights, and then this will put together to be their budget. Then this will now go to the Ministry of, I don't know whatever ministry they are. I think they will be under the legal aspect, Ministry of Attorney General's Department somehow, right? So that's how it's going to be. Then we have the supplementary review. Now, after the national budget has been prepared, in the course of the budget, there can be a review so that if there has to be a supplementary budget, for example, you see ministers of finance, when they read the budget, in the course of the year, they come with a media review. That is a supplementary review budget, right? So public sector budget are subjected to a review in the course of the year. So maybe we have budget, minister have read the budget in the first quarter. The first quarter has ended, second quarter has ended. Looking at going to the third and fourth quarter, realize that the estimate in the original budget calls for a review has been done, and realize that the estimate in the budget cannot support the activities the government want to undertake. They may want to come out with a supplementary budget. Okay, so we call that one supplementary or review budget. So we are saying that the public sector budget are subjected to a review in the course of the year. Where necessary, a supplementary budget may be presented to revise the original budget to factors to factor in adjustments in the revenue targets, revision in the macroeconomics assumptions, and adjustment to the expenditure. So in the course of the budget, after the budget has been prepared and maybe the minister have read the budget at Parliament, in the course of implementing the budget, in the mid-year, we see that the estimate, the conditions have changed, such that the estimate will have to be changed. For example, maybe we estimated certain revenue targets and realize that the revenue targets are what we estimated is not exactly what we are going to receive. Either it is going to be more than what we budgeted, or it's going to be less than what we budgeted. When it comes to the expenditure, maybe what we estimated as the expenditure for the period, now because of certain conditions that has come up in the year, there should be some adjustment in this estimate. The macroeconomic indicators that we use as basis for coming out with budget, we realize that economic conditions have changed, or national or global economic conditions have changed, certain unexpected things has happened, therefore there's a need for adjustment in the budget. This is done in the supplementary review budget, right? Then we have the public involvement. One aspect of public sector budgeting is where issues are put in the public domain, government organization will have government appointees, ministers, and this one will have a public forum. We look at what we call town hall something. Is it kind of date? We expect the minister to come to certain auditorium or certain forum, invite people, then present what is going on. That is what we call public involvement. Policies that they want to come up with, they can just have a town hall review or whatever, so that people can share their view. So the public sector budget involves the views of the public in its preparation, because the budget itself is prepared for the people, and therefore the views of the people sometimes might be sought. If there are certain projects or certain activities that the government wants to undertake for the people, it is good to engage the people, and that will actually a lot of information can come from the people, and that could be incorporated in coming out with the budget. So the public sector budget involves the views of the people in its preparation through the use of bottom-up approach. Bottom-up approach here means that the ministers, the various ministers may want to, engage the people by explaining to them what their views are, and in coming out of the budget, what they expect to be included, right? So this we call the bottom-up approach. The administration of the public expenditure survey and the budget hearing. A meeting often open to the public, where individuals can comment or ask questions about the proposed budget. That we call that one public expenditure survey, and public expenditure survey and budget hearing. It is a meeting often put to the public, where individuals can comment or ask questions about the proposal. So take note of that for objective purposes. We are saying that the public involvement, there's something we call public expenditure survey and budget hearing. These are meetings that various heads of departments of the covered entities and the ministers sometimes open their doors to the public, where individuals can comment or give their views, and that is included in the budget. Then we have the budget regulation. Public sector is regulated with certain laws. So budget regulation, there are regulations that governs the way public sector must prepare their budget. So in the budget preparation, we have regulations that govern how the public sector budget must be prepared. And if you are in the public sector, you must, prepare your budget in line with these regulations. So budgeting in the public sector is highly regulated. Take note of that. We are saying that budget in the public sector is highly regulated. And in Ghana, the Constitution is the #1 regulator. Okay, the Constitution actually spells out clear how the public sector funds must be regulated, right? And you listen to what happened to the Chief Justice, Chief Justice Tokonu, in terms of how he actually interpreted the bylaws in the organization to mean, and what the Constitution is saying. So if you relate to the Constitution, it has no go. That's why he's losing her case, right? So the public sector budget is highly regulated, and in Ghana, the Constitution, the Public Financial Management Acts, and the International Public Sector Accounting Standard 24 regulate the preparation of the public sector budget. The laws cover all public sector institutions in Ghana. Private sector budgets are firm specific. Also, as at 2018, there is no existing international standard that regulates private sector budget. So that is the difference between the public sector budget and private sector budget. Public sector budget is highly regulated, and the laws that regulate the public sector budgeting is our 1992 Constitution 1, Public Financial Management Act, and the International Public Sector Accounting Standard 24. This governs, and there are provisions in this act that, or these regulations that govern the way public sector account budget must be prepared. Unlike the public sector, the private sector, the laws they are used or the regulations used are firm specific. And as at, like we are saying, 2018, there hasn't been any existing standard that regulate how public sector budget has to be prepared. Means that the public sector budget is a discretionary act. Okay. Then let's look at the benefit of preparing public sector budgeting, or the benefit of public sector budgeting. That we are talking of the importance of budget, the benefit of budget, the importance of budget, the role of budget. Take note. This we are going to discuss can stand in for the benefit of budget, the importance of budget, the role of budget or budgeting as well. So communication of public policies and programs. Now, the budget is a communication tool. In the public sector, it communicates the government policies and program. Before budget is prepared, a document or budget guidelines which contains information regarding how governments wants, regarding the policies the government want to implement or undertake for the budget period, activities government want to take are spelled out in the budget guideline. This is a form of communication of government policies. Okay, so we are saying that budget in the public sector is a communication of government policies and programs. The managers of the states inform the public and all stakeholders through the budget prepared. For instance, the 2017 budget of Ghana made it clear that the state was going to roll out the free HHS policy of government as well as other programs. So if you listen to the budget read by the Minister of Finance every year, it tells you clearly what the government is intend to do and what policies the government wants to undertake in the budget period. Just recent one read by the Minister Kessel Atu-Hayford, Kessel Atu-Forson, right? Atu-Forson clearly talk of the big push, clearly talk about the government policies they want to, and it's a clear communication to the citizens of the people about what government programs and policies are, right? So it's a communication of government policies and programs. Also, public sector budget serves as a planning for government policies and programs. Planning for government policies and programs, because the budget read, whatever the minister reads at the parliament are estimates, what government wants to do. So definitely it gives government the basis to plan, because once you have come out with those budgets, it means that you now have to plan how to execute the content of the budget. So we are saying that budget serves as a planning for government policies and programs. Public sector budgets instills the culture of medium-term planning in the public sector through the medium-term expenditure framework. All annual budgets must be accompanied by at least a 3-year broad expenditure framework. So that is the planning aspect. For every year budget, there should be a plan for the next 3 years. Okay, for every year budget that the government plans, in terms of the macroeconomic indicators, in terms of revenue projections, in terms of expenditure, we should have at least 3-year development or medium-term expenditure plan or framework, and that is a means of helping government to plan. So we are saying that the public sector budget is a planning tool for government policies and programs. Also, public sector budget helps in the allocation of scarce resources. This one you should clearly understand, because just like individuals, organizations, governments are also economic units, and therefore they are limited by resources. If Ghana has everything, would have been going to IMF, wouldn't have been going for loan from other countries. We wouldn't have allowed Chinese to be, so we are limited in terms of funds. So the budget is a means of allocating the scarce resources. So the nation's scarce resources will be properly allocated through the public sector budgets. Given the size of the public sector, budgeting contributes greatly to making sure that resources are fairly and equitably distributed to the various MDAs and MMDAs. That is, the central government as the ministry, department, and agencies, and the local government, metropolitan, municipal, and district assemblies. So we are saying that budget serve as a means of allocating the scarce resources. It also serves as accountability and transparency. Yes, we want government to be accountable and transparent in using public funds. So therefore, if they estimate how much revenue we are going to get in terms of tax, in terms of grants, in terms of donation, in terms of loans, and then how much we are going to also spend in terms of compensation, in terms of goods and services, in terms of contracts, in terms of any other government expenditure. And then once that is given us, and we'll know that this is what we are budgeted for, at the end of the day, we expect them to come and account to us, making reference to the estimated amount, whether they receive what we budgeted for, and then the expenditure, whether we were able to spend within what we expected or we have spent more than that. This ensures accountability and transparency. Okay, if we know exactly how much we budgeted for, then you can come out with the actuals, whether we got what we budgeted or we did not, and what happened. If it's the expenditure, whether we spent more than what we budgeted or we did not, and what happened. This makes accountability and transparency very clear. So we are saying that ensuring accountability and transparency in the preparation of government funds, in the appropriation of government funds is achieved through budgeting for the public. The public sector budgets are widely distributed and discussed, of course, because once the budget is read by the minister, it is made available on the net, it's made available anywhere. Even class 1 child can Google for it, can search for it and get the information, how much government said it was going to do. So once it is prepared, it is widely distributed. Several versions of it, including the citizens' budget in some major local dialects, open up the public financial system for public scrutiny. Based on the budget is able to assess. Based on the budget, the public is able to assess whether managers of state, supposed to be managers of state funds plan to use the state resources judiciously, and assess at the end of the period whether the funds were actually used for its purpose. That's what I said. So once the budget is prepared and it is read for the public hearing, the versions of it are made available, and everyone can have one, read and understand what the ministers or what the government managers or what the managers of the public fund are estimating as to how they are going to use it. So at the end of the day, we can use that one as a basis to compare with what they have actually used the resources for and see whether they use it in line with what they plan or not. Then also, the budget helps in controlling costs. Of course, the budget helps in controlling costs. Once we have budgeted, we spend within the budget, and therefore we will not incur unnecessary costs. So public sector budgets are used as basis for controlling expenditure within the budget, because every entity whose budget has been given expect to operate within the budget. So they are guided by the budget that has been given them. So they will not spend excessively, right? So the various levels of authorization for public sector budget and public spending, as well as the establishment of cost constraints, facilitate public sector cost control, right? So the next one is the basis for preparing a basis for measurement. Now, when the budget has been prepared, it also serves as basis for measurement. Budgets are basis for assessing how well managers of states have been able to operate within the defined the confines of their operations, or how they have achieved state objective with the allocated resources. So in the budget, the government will state what they want to do and the amount of money they expect to use. If it has to do with if it comes to road construction, the budget for how much they are going to use to do roads, like we had in the Atufosen's big push road agenda, an amount of money they want to use it for, the hospital, the school feeding, the CHHS, all these major expenditure they have given. At the end of the day, we can use this as basis to measure their performance. Because at the end of the day, you said you are going to do, let's say, big push, you are going to construct roads, and the amount has been given you budgeted. Now, at the end of the day, what did you do with the budget? So we can be able to measure their performance based on the budget, based on the confines of the plans, or how they have achieved the objective with the resources that was budgeted for. Then it's also a motivation tool. Like I said already, we have said budget must be a motivating tool if it is going to secure the desirable outcomes. Therefore, budget in the public sector is also a motivating tool. When the GRA, that is the Ghana Revenue Authority, has come out with their revenue targets and they're able to work towards achieving the target, you see, they become motivated. You see, if the budget targets are realistic, it motivates them to work to achieve, because that could also be as a basis for appraising some of the workers if they have done well. Okay, if you are working and there's no basis to measure your performance, you are not motivated, because you know that whatever effort that you put in, somebody will not recognize it. But if there are targets which you can work towards achieving it, you can speak to it. Once you hit your target, you can make it known, and people can be appraised for that. So budgets motivate public sector workers, and private sector contribute their best towards, and the private sector contribute their best towards the achievement of the state objective. Well communicated state objectives should energize the populace to contribute their best towards the motivation of the nation, right? Because if the budget is read and the citizens, the people in the country, the workers themselves, because the citizens have moved the workers, everybody involved, we are all happy with what the budget intends to achieve. If in terms of revenue that we have to pay, or taxes we have to pay to achieve those targets, we'll all be motivated to pay to help government to achieve it, right? So if we don't know what is going on, if there's no budget, if you don't know what government is doing, it will be very difficult for us to actually know what is going on, say that we'll be free or we'll be willing to pay taxes. Then the last one is fulfilling the relevant regulation. Once budget is prepared, the Ghana 1992 Constitution requires that at the end of each year, the ministry, department, and agencies, the metropolitan municipal and district assemblies must come out with their budget. All government entities must come out with it, and this must be put together to form the national budget. And this must be read at Parliament to seek Parliament approval for spending from the consolidated fund. These are regulations. And so if the budget are prepared, it means that we are fulfilling the regulations that we have set up in the 1992 Constitution and in our Public Financial Management Act. So we are saying that public sector budgeting enables the managers of the state to fulfill their regulatory requirements. Remember that the regulatory requirements are the 1992 Constitution, the Public Financial Management Act, and the International Public Sector Accounting Standard. What the regulations are, when we prepare the budget, it means that we are complying with these regulations. It shows a proof. It shows proof that the required laws on budgeting have been followed by the managers of the state fund. So these are the features or the characteristics of or benefits. Sorry, these are the benefits of or the importance or the role of public sector budget. Right. Let's move on to Unit 3, Section 2. These are approaches to budget in the public sector. Approaches to budget in the public sector. Now, there are so many approaches that the public sector organizations may use in coming out with the budget. So by the time we finish going through this section in particular, we should be able to explain the various stages of budgeting cycle. Explain the various stages of the budgeting cycle. That means in the preparation of the budget, the steps that we go through in coming out with the budget. Then also discuss the various approaches to preparing the public sector budget. The first one is the budget formats and budget approach. So budget formats may be line items budgeting or program-based budgeting. So when we talk of line item budgeting, it's a budget where the various expenditure items are estimated in terms of the major revenue items, like where are we going to get revenue from government, what sources of revenue is government expecting for the year? First, from taxation, from taxes. Second, from donors or let's say grants, from internally generated fund and all that. These are line revenue items. Then when it comes to expenditure, we are talking of compensation, we are talking of goods and services, we are talking of assets. This becomes line item. So the format of the budget can be a line item budgeting. I hope you're understanding me. Are you there, my student? Hello?
Hello, sir. We are here.
Okay. So we are saying that the format, the budget, we have the budget format and the budget approach. So the format, it can either be a line item budgeting or program-based budgeting, where the budget approaches may be incremental. So the program-based budgeting, the budget approach can be incremental budgeting, zero-based budgeting, and then performance-based budget or activity-based budgeting. The line item one is what we are going to talk about first. So we have the line item budgeting and program-based budgeting. And for the program-based budgeting, we have the incremental budget approach, zero-based budget approach, performance-based budget approach, and activity-based budget approach. So take note of those approach. Now for the line item budgets, a budget prepared by grouping individual financial statements. A budget prepared by grouping individual financial statement items by cost centers or departments. In the process of its preparation, the organization identifies the various sources of revenue to finance the various expenditure sources for the organization without clustering these revenue sources and expenditure according to activities or programs. So what we are saying is that in the line item budgeting, the organization identified the various sources of revenue and the various expenditure sources for the organization without clustering, that's grouping them according to activities or programs. So we're talking of revenue from taxation, revenue from, let's say, grants, revenue from say internally generated fund, IGF, revenue from donor, revenue from loans, all those sources of revenue, we just itemize them. Then when it comes to expenditure, we itemize them without necessarily trying to group them according to maybe the expenditure revenue from programs or expenditure for programs, activities, or performance or whatever, right? So that is line item budget. So we are saying that once these revenue and expenditure sources are identified, they are used constantly when we are preparing. So line item budgets are mostly prepared on incremental basis. So the approach could be, it can be prepared in increment. Of course, we can prepare the line item budget on incremental basis. That is by adjusting existing line expenditures by expected increases in the revenue periods. Needless to say that first line budgets for an organization will be prepared using the zero-based approach. So line item budget, or the format for preparing the budget, which is line item budgeting, could use zero-based budgeting approach or incremental budgeting approach, because the first line item budget that will be prepared definitely will use zero-based, because that one we are starting at scratch. But if we have already known the various expenditure items and the various revenue items, then subsequent years we can use incremental budget. We're going to talk about them shortly. So basically what we are saying is that line item budget is a budget that is prepared where various expenditure revenue sources and expenditure sources are itemized. So you have something called item 13. If you have heard of item 13, I don't know whether you have heard of item 13 before. Have you heard of item 13 before?
Yes, sir.
So,
What is it about?
after a meeting, the refreshments that they give you.
Very good. So how it got its name is that previously the budget were prepared on line item basis. So usually the item 13 there is the budget for refreshment. So everybody get there that if you look at the budget, if that item is there, that means that definitely after the meeting there should be item 13. That is why it got its name. You see, because the budget prepared, when you get to the 13 aspect, it is the estimated amount for refreshing the workers for whatever activities, and therefore people have been referred to it as item 13. So that is line item budget for you. Now, in the budget, the government agencies consider its expenditure lines. So in that, let us consider an example of an item line item budget. So in the budget, we are going to see, in the budget, the government agency consider its expenditure lines to include compensation for employees, goods and services, and assets. The budget are prepared based on the expenditure lines. For example, table 1.1 present an example of line item budget. So a line item budget, we have compensation. So compensation is an expenditure item. The how much we are going to pay for, they haven't brought the revenue aspect. You could also, there could be the revenue aspect that will talk about where sources of revenue for government. It could be from tax, from even the tax, we have direct tax, indirect tax, VAT. So indirect tax include VAT anyway, include custom duties and all those things. You could bring those sources, all are itemized based on the budget prepared, right? Then we can also have grants, loans. All this may be items on the revenue side. But for expenditure side, typical expenditures, we can have compensation, which includes, which will be estimated amount. And this compensation is emolument for public sector workers, right? Then we have, and it includes all the pensions we pay, all the salaries we pay, pensions we pay, allowances we pay, all those ones include the compensation. Then we have goods and services, and the goods and services can be itemized to include the traveling and transport, TNT, utilities services, telephone services, stationery, maintenance of vehicles. These are all goods and services. And then assets, you have only land. There could be so many assets that the district may want to acquire, or whatever government organization may want to acquire. This is an example of line item budget. An example and advantages of this line item budget. Some of them I will leave you to go and read them yourself. Sit down and make your notes from it, because if we say we are going to talk about everything in there, we are going to have a problem. So the line item budget has the following advantages. So we are saying that it is relatively easy to prepare. Why are we saying so? Since the process involves consolidating the itemized revenue and expenditure sources of each unit within an organization, preparation of the line item budget is relatively easy for units as well as the entire organization, because if we have a unit, we are just adding together issues about services, goods and services, as asset compensation. If it is revenue aspect coming from taxation, we are just consolidating them. So it becomes easy to prepare. Also, it is easy to justify the budget because it is mostly based on previous year's transaction. And what we are saying is that the line item budget mostly uses incremental approach, and therefore it is easy to justify because you look at what we incurred last year or what we generated last year. Now consider the new conditions that will prevail this year and use it to adjust the last year one to get your current year budget. So it becomes very easy to justify because they are mostly based on previous year budget that has been adjusted for the current year. Then identification of revenue and expenditure sources are very easy. It is easy to identify the revenue and expenditure sources because these have been itemized in the budget. So line item budget identify the various sources of revenue and expenditure that an organization earns or incurs without linking them to any project or program. This enables the organization to identify their key funding and expenditure sources, the amount involved in them, and how to manage these sources. Don't you see? It is very simple. You are saying that in the line item budgeting, the various expenditure or revenue items are clearly listed, line up in the budget. So it is easy to actually identify your revenue sources as well as your expenditure sources, right? And also control over income and expenditure, because you know your sources of your revenue and the sources of your expenditure. You can easily match the revenue with the expenditure or the income with the expenditure. Since revenue and expenditure sources and amount can be easily identified, assessment of the sufficiency of the revenue for the expenditure can be done relatively easily for control purposes. So control over expenditure, income and expenditure is clear under the line item budget. Any question up to this point? Then it has some disadvantages as well, because everything that has advantages has disadvantages. We are saying that under the line item budgeting format, it is difficult to assess the budget performance because we have not prepared the budget based on programs. So the amount we said we are going to generate, amount we are going to spend, but for each program or for each project, how the project are doing, we are not going to be able to know. So it is difficult to actually assess the performance of the managers or the managers of the funds when we are using the line item. A line item budget matches revenue with expenditure without classifying the expenditure and revenue according to programs, projects, to assess the performance of the budget in achieving the outcomes, the output of these programs or projects. For instance, an increase in expenditure by may be justified because of a compensating increases in revenue or improvement in other performance indicators. So that is the problem with it. Another problem is that possible inefficiencies can be prepared. Possible inefficiencies when prepared on incremental basis. Once we are using the previous year basis to project the current items for the next year, inefficiencies in the previous year could be just be incorporated in the current year. So that is what we are saying. And then there could also be suboptimal spending. So these are the disadvantages of the line item budget. Now let's come to the activity-based budgeting. Here, when we talk of activity-based budgeting, the organizations are budgeting based on the various activities they want to undertake. So if they have about 5 activities the government want to undertake for the period, how much revenue we need and how much expenditure we are going to incur for each activities is what we prepare. So according to Institute of Chartered Management Accountant 203, official terminology, they describe activity-based budgeting as a method of budgeting based on activity framework. The method of budgeting based on activity framework using cost driver data in the budget setting and the variance feedback processes. So what we are saying is that we budget based on activities. So if, for example, government is going to travel this year, let's say government traveled this year or last year 3 times. So the budget for government traveling for last year was 3, and assuming that each trip government spent we budgeted for government spending 1 million. That means that for 3 trips in the year last year, government we budgeted for, let's say, 3,000 because government is going to travel 3 times in that. But government traveled 3 times in that year, and we budgeted 1,000 for it. So the total budget for that activity was 3,000. Now this year, if government wants to travel, let's say 5 times, that means that we are going to look at the activities this year, government activities in terms of traveling. If the activities is going to increase from, let's say, 3 to 5, then the cost driver is per travel. The cost driver is the government traveling per trip. Okay, and the cost for per trip is, let's say, 1,000. Then we are going to use that one to calculate for this year. So last year it was 3,000. Now this year, because we know the government is going to travel 3 times, then we multiply the 5 times. We multiply the cost drivers of 5 times 1,000 to get the 5,000. So the budget for this year is going to be 5,000 based on the activity of government for this year. So that is how it is done. We're saying that the CIMA, they define it as activity-based budget is a method of budgeting based on activity framework using cost driver. I've explained what the cost driver here means, using the example of the government traveling, data in the budget, stating and variances feedback processes. So the variances, the differences in the activity in the course of each of the year that we are budgeting. So it is a budget technique where individual activities within the organizations are assessed in terms of their contribution to the achievement of the organization's objective. In this form of budgeting, the revenue generated by an activity undertaken by a unit in an organization are assigned directly to that unit, while expenditure incurred are analyzed to identify the activities that leads to that cost, so that the assignment of costs will be based on these cost drivers. An organization that uses an activity base needs to budgeting needs to identify the various activities that leads to costs and accumulate the costs into cost pools, put together similar costs, and find out the event that leads costs to either increase or decrease. That's a cost driver, and assign costs on the calculated cost per cost driver, and assign cost on basis of the cost driver drives. In fact, if you have done have you done activity-based costing? Hello?
Yes, sir. We have done it.
Yes, so just look at activity-based costing. Yes, so activity-based costing is linked to activity-based budgeting, because in this case, we look at the various activity and the cost that will be generated, then look at the number of times that particular activities will absorb that cost. So we calculate the cost per cost driver, and then we assign the cost to the various activity based on the amount of cost driver they use, just like we have in activity-based costing. So examples are here. Advantages of that budget approach, that is activity-based budgeting, is that it enables control to exercise. It enables control to be exercised at the exact point, at exact unit that actually incur the costs. You explain that. And then also, activity-based budgets ensure efficiency, because justification should be offered for incurring certain activities and in certain magnitude. So you just look at the advantages and then disadvantages of that. Then we have the program-based budgeting. Program-based budgeting. Under program-based budgeting, so we said that the budget are prepared from the point of view of specific programs. You know, government sometimes undertake programs. So we budget for such programs. Okay. So let's say one village, one dam program, or let's say school feeding program, or let's say Agenda 111 program. These are policy guidelines and could be put into different programs, and we can prepare budget for the various programs. So that is what we call program-based budgeting. Here, we are not going to just prepare the budget based on the various what do you call it, line items, but we prepare the budget based on the programs. Of course, we can get compensation in it. We can get various goods and services we are buying and those things in it, but it is prepared for that particular program. So we said the budget are prepared from the point of view of specific program that the organization or its unit plans to undertake in a specific period, and not on the various expenditure lines that we have in the line item, not grouped into programs. So because for the expenditure line item, they are not grouped into programs. Now here, each program would contain specific line items that it purports to generate from and or spend on. So each of the program, we can have the various line items in the program, but the budget is prepared for that program. When the budget are eventually approved, appropriation is made to specific line items in the program. Have you seen that? So if the budget for that particular program is approved, we will approve for the compensation in that program. We'll approve for goods and services budget for that program. We'll approve of whatever asset for that program and all that. In Ghana, the program-based budgeting was introduced in 2014 after it was successfully piloted the previous year, that is 2013. The program-based budgeting replaced the activity-based budgeting approach, which had been in force since 1999. So you are looking at some objective questions in there that the program-based budgeting replaced the activity-based budgeting in 2014. Okay, Then it has been piloted successfully in 2013, and so it replaced the activity-based costing, which has been used since 1989 to 2012, right? So a well-functioning medium-term or the MTEF was thought to be the better associate with the performance-based budgeting approach. All right. So activity program-based budgeting identified series of programs and associated activities within the organization and formulate budget in terms of the program, and then link the budget expenditure to clearly defined programs results. An example would be where the Ministry of Health may have preventive health program, which is broken down into malaria control program or prevention, cancer prevention program, and etc. So program-based budget is a form of performance-based budget. So program-based budget is a form of performance-based budget. So where performance-based budgeting is the practice of developing budget based on the relationship between the program funding levels and the expenditure results from the program, right? So example of program-based budgets shown below is the 2018 program-based estimate for the Commission on Human Rights and Administrative Justice program based on estimate for the 2018 year 2018. And the document first identifies the policy objectives, that is the mission, core functions, the policy outcomes, indicators, and targets, then the expenditure trends for the medium term, and summary of key achievement in 2017. So the program of SHRAJ 2018 were justified as management and administrative was identified as management and administrative human rights, administrative justice, and anti-corruption. These programs, so we have 3 programs under it. First one is management and administration, 1, human rights and administration and justice, and then we have anti-corruption. These forms the basis for the program budget presented below. Refer to page 224, an example of the program-based budget. So program-based budget, we have the right by chart of account. So we have program, sub-programs, and national accounting summary, and then Commission on Human Rights and Administrative Justice. So the first one is management and administration. So here you have the estimated amount, general administration, compensation of employees, then the use of goods and services and fund. That is for that management and administration program. So estimated is that amount. Then we have promotion and protection of human rights. Then that one too, we have promotion and protection of human rights, estimated amount, use of goods and services. That is also with that one. Then we have administrative justice. You have that one. Then corruption. So these are all programs, and total together will give you the budget for that particular department, SHRAJ. Right. I hope you have understood it. So it is your time. It is your duty to sit down and go through how program budget, because in the same organization we can prepare our budget based on the various programs we are undertaking. So we will not just prepare our budget based on a line item, but we prepare them based on the various programs that we are undertaking. So like SHRAJ, as we have said, they have the administrative program. So budgeted is made for it. They will do that. Then we have promotion and protection of human rights. That one too is there. Then administrative of justice, that they have their budget. So you see, if you look at the budget, we have this one total up this one total up that, and then this one total up that. Then total anti-corruption is that. Then you can put all together to get a budget for the period. So we have advantages for program-based budget. We're saying that since the budget are prepared or are presented based on programs, it is easy to prioritize programs, because once you have prepared the budget based on programs, you know which program is providing the targets of the various program, amount of money that we need to use for each of the programs, so we can prioritize them. Since the budget are presented on programs, it is easy to prioritize programs and concentrate on the programs that are found to be viable or helps the organization to achieve its objective, right? Because the organization has its mandate or its core mandate. And so the various programs will know which of them that will help us achieve our core mandate, and that will help us prioritize that one. It also enabled the organization to link budget inputs with outputs, because once it's a program, we have estimated amount of money to achieve the target of that program. Now, at the end of the day, the money that we got, have we been able to use it to achieve the program? So we can easily match the input and output from that program. So in other words, the ministries, departments, and agencies that prepare the budget can assess whether the achievements that is proposed or actual from the budgeted, that is the budgeted from the budget are worth the cost associated with it. Then also it is easy to easy identification of budget cost control targets. With the program-based budget, it allows easy identification of budget cost control targets, right? Since the budget are grouped into programs, it is relatively easy to identify each program contribute to the entire organization's cost build-up, and subsequently appropriate control cost control measures. So appropriate cost control measure could be developed for the target program or programs. The last one is that the program-based budgeting facilitates the management of future service delivery. It facilitates the management of future service delivery. When an organization prepares a budget based on programs, it facilitates the planning for each program, proper allocation of resources, and enhance the benefits of division of labor and accountability. So that is, it also has its own advantages, that it takes time and effort to develop and administer a program-based budget. It takes time and effort to actually develop and administer a program-based budget, because if the organizations have about 5 programs within 8 activities, then you have to budget for each of them. Have you seen? So it takes time and effort. Also, incorrect program-based budget lead to appropriate budget decision, such as, so it should be inappropriate budget decisions, such as wrongful allocation of scarce resources. So if the program itself is not, for example, the one village, one dam program, one village, one dam project like this, or program like that. Now, you see, the program was not well executed. It was a bad program. Now, at the end of the day, it was a wrong decision, and this has led to a wrongful allocation of resources that has gone waste, because now those dams they created, we cannot find water in them. There's no water in those dams. So you see, it's a bad program. Then we have the zero-based budgeting. This one is an approach of budgeting, right? This one is an approach of budgeting, whether it is a program-based budget, activity-based budget, or let's say line item budget. They could all be either zero-based or incremental budget. Okay, zero-based budget or incremental budget. So the zero-based budget here is a form of a parent budget where the budget estimate start from the scratch. We start budget from the scratch. We do not actually prepare the budget based on previous year estimates. every estimate is done for the merit of it. We do not include anything that cannot be justified, right? So traditional form of budget is prepared on incremental basis, but zero-based budgeting is budgeting from the scratch. Oh, but have we talked about incremental budget? We have not. Okay. So please, in the examination, take note of program-based budget. Take note of it. For advantage and disadvantage, take note of zero-based budget. Take note of it, advantage and disadvantage, and then incremental budget. These three, do not joke with them. And then line item budget. Line item budget. So incremental budget, line item budget, program-based budget, then zero-based budget and incremental budget. Take note of these four main budget approaches, so that you can be fine in the examination. So we are saying that for the traditional budget method of preparing budget is normally the incremental budget. So we are going to talk about the incremental budget very soon. But hear me, it means that incremental budget is a budget which is prepared based on previous year targets or budget estimates. Now, the alternative is the zero-based budget. Zero-based budgeting. It is the budgeting from the scratch without reference to previous year budget. This means that all activities are assessed. All activities that are included in the budget are assessed to offer a justification for their inclusion before they are included in the current year budget. So what we are saying is that the incremental budget is a budget that is prepared from the scratch, and that any activity that will be included in the budget has to be justified before their inclusion in the current year budget. I hope you're understanding me. So the name implies that the name zero-based budget implies that the basis for preparing the budget is zero, so that any units or function should have to be analyzed. Would have to be analyzed its need and cost, so that the budget is prepared on that basis. So before we include any item in the zero-based budget, we have to be able to analyze the need of that particular activity and the costs that is we are going to incur for undertaking that activity before they can be included in the zero-based budget. Thus, the budget does not build on any base year budget, as is done in the case of incremental budgeting. On this basis, every line item finds its way into the budget because it would be earned as revenue or incurred as an expenditure in the current year budget. So we do not, in the zero-based budget, is a budget that's prepared from the scratch, and that any item or any expenditure that is included in the budget is justified for their inclusion in the budget. And so before we include any item in the budget, we have to analyze its needs, why the need for it, and the cost we are going to incur. So any item that is in the current year, the zero-based budget, then means that that expenditure will be earned. Actually, it is not based on estimate, but it will be earned for the year. And then if it's an expenditure, it will be incurred for the period, right? So it has the following advantages: that it leads to budget accuracy and efficiency because it's zero-based. So before an item is included in the budget, its justification is done before it is included. So it is zero-based. Also, it is accurate and efficient. Also, it facilitates goal congruence through coordination and communication among various units of the organization. Yeah, because before a budget is included or an item is included in the budget, its justification must be given. So it facilitates goal congruence. We will not just sit down and do an estimate for what happened last year, so that we'll just do estimation for the people. No, everyone who wants a particular item to be included in the budget should come and explain why and justify why that thing should be included. and then we add. So it actually facilitates goal congruence through coordination and communication among the various units. Also, variances are likely not to be too much because we do not we actually estimate what is likely to happen in the budget. The actual budget, the budgeted estimate and the actual activity do not actually deviate so much. So we are saying that the zero-based budget variances are likely not to be too much, since current year budget does not have any previous year's inefficiencies and are based on expectation for the current period, because whatever is included in the budget are expected. So normally the actual estimate does not actually or actual cost does not deviate so much from the budget, and so variances are reduced. Also, budget preparation and implementers are better motivated because their decisions create the budget. Okay, we do not sit somewhere and estimate for them, but we ask them to themselves come out with their estimate and why they should include it, and therefore they become motivated because their decision include in the creating of the budget. Then also, zero-based budget enables organization to constantly assess how well their budget support the achievement of their objective and mission. Because they have estimated exactly what is likely to happen, and so they actually compare what they have budgeted with what is happening actually to be able to ensure that the budget support their achievement. It also has disadvantages. Everything that has advantage has disadvantages. So we have that the zero-based budget is expensive in terms of budget, because now we have to sit down. People have to sit down. People have to go and do estimates. Some people have to go and do a lot of work to come out or to justify whatever expenditure or whatever revenue they expect to generate. Unlike the zero-based budget, where we only look at the economic conditions and add percentage, right? This one, you have to now sit down, come out with the realistic what exactly you expect to incur or generate for the period. It also requires adequate manpower with required skills and ability to analyze the activities in detail, as well as assess the cost implication of those activities. Yes, because if you don't have people who have technical knowledge to estimate properly, you cannot get the right things done. Okay, so it requires adequate manpower, because we need to have people who have technical knowledge to be able to estimate correctly to form the basis of the budget, right? And so we need skilled people. These people will have to help in analyzing the various activities so as to assess the cost implication of them to be included in the budget. Also, so we have finished with that. The last one is the incremental budget. The incremental budget is alternative to and that is a traditional way of budget. And most public sector organizations prepare their budget using the incremental budgeting approach, because it is very easy to do. And I mean, it's a matter of looking at what we estimated last year and what is likely to be the changes that will occur this year. If we expect that inflation rate is going to be about 10% this year and affecting our estimate, we just estimate 10% and add to the previous year, we have gotten our budget. So it's very easy to prepare, and most of the public organizations in Ghana they use this incremental budget, but it actually harbor a lot of inefficiencies, because if last year budget has inefficiencies, definitely it will be carried forward to this particular year, because we are just based on the previous year inaccuracy to project this year budget. So let us look at the incremental budget, which is one of the budget I'm talking about. I'm saying that you should be mindful of them, know what they are, understand them, advantages and disadvantages, so that in the examination you can write, right? So in incremental budgeting, previous period, that is the base year budget, informs the preparation of the current year budget by adjusting the base year by an expected variable in the current year. The preparation of the budget is based on the premise that previous year activities will repeat in the current year, and the magnitude of the increase is based on the size of the previous year, the size of the current year's increase, the the size of the current year increase is influenced largely by inflation and changes in activity levels. So specific income and expenditure lines are adjusted by the change magnitude. So what we are saying is that in the incremental budget, it is a budget that is prepared from the uses prepared based on the last year estimate budget. Or so it uses the last year as the base year to project for the current year budget. And so what we do is that we look at the activities of the last year budget and look at what is likely to be the size of the current year activity, and then we adjust with expected change. And most of the change could be the inflation for the period or the size of the activity that is going to be changed. So we are saying that the size of the increase, current year's increase on the previous year is influenced largely by the inflation and the change in activity levels. Okay, so that is it. Let's look at, for instance, if we assume that the information in the line items budget, for example, table 1.2, as we did previously above, would increase by 5% for simplicity, then the current year budget would look like. So that was the last year budget, which we did. That is the compensation, then the goods and services, then assets. This was the budget. So we are saying that this is going to, for this current year budget, is going to increase by 5% to cater for inflation, because I will see that the same thing is going to be done next year, this year, but the fact that there's an inflation rate of 5%, so we just adjust the last year figures to reflect 5% increment. So that will do, and it will give us this amount. So that is very simple. You can just calculate 5% of the this one, and that gives you this one, like that. So that is simply that. Then advantages of incremental budgeting. It is very important that you know that it is simple and less expensive. I have said that already, because here we are not going to sit down and crack our brains as to how much activities you are going to undertake, how much amounts are we going to use, and whether that activity is justifiable for this period or not. No, we have done this thing last year. So this year, if we are going to do the same thing, what will be the budget for this year? Assuming that inflation is for 10%, just increase. So it becomes a very simple budget to prepare. So it is simple and less expensive to prepare because it is based on current actual or recent budget. So either last year or this year actuals for last year, or we can look at the budget for last year. Then also it improves the transparency of the budget, since budget figures can easily be verified by applying the expected change on the basis. So why we are saying that how much budget for this period could easily be assessed, and it's more or less transparent, because if we spend, let's say, for road transport or for road construction, we spend let's say 10 billion, and we expect that this year the roads we constructed here is going to increase by, let's say, half. That means that our budget should include half of it. We are going to have 15 billion, because we have, and we know we estimate percentage of increment easily. So it makes it very easy to know the amount of increment. And also it ensures consistency. It ensures consistency in operating activity, which facilitates comparability. So if we are trying to compare what we are doing over and over, then it means that this one is ensure consistency. And funding for medium-term and long-term programs would be secured and easily monitored, right? Then it also have disadvantages. Previous years' inefficiencies are automatically carried to subsequent years. It is less motivating since there are minimal input, because the people who are developing the budget may not have much input. The percentage has been added already. So as to how much you want to incur and the justification for it will not matter, right? So it is less motivating, and it is easy to build budgetary slack into the budget, because once we are just based on this, we put on slack. Slack is something that dummy, like we know that this is not going to happen, but let's say, oh, this one is a budget. This one we don't know exactly, so we don't know exactly what is coming. But because it's a budget, let's say we are going to put this one there. You see, so there's no real justification for including those amount in the budget. But because we are basing on previous year budget, we just put in estimated amount which we cannot even justify its inclusion. That is the slack. So managers are likely to estimate revenue and underestimate revenue and overestimate expenses by assuming a small percentage increase in revenue and a bigger increase in expenditure for budget to be easily achieved. Sometimes, because they want to achieve their budget, they can just put these slacks. And also, it can encourage overspending, since previous year's activities may not be needed in the current year. So these are the disadvantages of Then let's look at the regulatory framework of budgeting in Ghana. We are saying that the budget is regulated, and the various laws that regulate the budget is the 1992 Constitution of Ghana, the Public Financial Management Act of Ghana, and the International Public Financial Sector, International Public Sector Accounting Standards 24. So these are the three main laws, or say regulations, that governs the preparation of budget in the public sector. Take note of them. In the examination, you can be asked. Even in the objective, you can be asked. So take note. Now, by the time you finish going through this session, you should be able to identify and explain the constitutional requirement on budgeting in Ghana, identify and explain the role of key users in the budget, key officers in the budget, identify and explain the role of key officers in Ghana in respect of budgeting, and also explain fiscal policy implication for budgeting in Ghana, and identify the content of fiscal policies strategy of Ghana. Then demonstrate understanding of knowledge of the content of the International Public Sector Accounting Standard 24. So first of all, we are going to look at the provisions of the Ghana 1992 Constitution regarding budgeting in Ghana, and then we'll identify and explain the role of key officers. And here we are talking of the Public Financial Management Act, the role it has given to the various officers. Here we are talking of the Minister of Finance, the Director of Budget in the ministry, and the various officers who are in charge in coming out with a budget. Okay, we'll also look at the fiscal policies implementation, fiscal policy implication for budgeting in Ghana. And when we say fiscal policy, we are talking of issues of taxation, issues of taxes, generating of revenue and expenditure. And then we'll look at we identify the content of the fiscal policy strategies document and all that. These are in the Public Financial Management Act. So the provisions of the budgeting in the 1992 Constitution of Ghana, provisions on budgeting. Look at it. So we are talking of provisions on budgeting in the 1992 Constitution of the Republic of Ghana. And we all know what the Constitution is. So the 1992 Constitution of Ghana, Article 179, subsection 1, requires that it requires the president to present the budget to the parliament at least 1 month before the end of the financial year. Please, have you heard that? According to 1992 Constitution of Ghana, Section 179, subsection 1, it requires the president of the Republic of Ghana to present the budget to Parliament at least a month before the end of the financial year. So in this case, a month before the end of financial year means that the budget should have been read at the Parliament in December, or let's say a month before the end. So that means, yeah, in December, early December or even November. The budget should have been read in November, before December, a month before the end of the year. The Constitution recognized the importance of planning for the financial receipts and expenditure of the country. So 1992 Constitution actually recognized the importance of planning for how much we intend to receive in terms of revenue and how much we intend to spend in terms of the expenditure for the country. Based on the Constitution, timing of national budget should be of essence. So the preparation and presentation of the national budget to the Parliament should be of essence to national economic managers. And here, when we talk of national economic managers, we are talking of the people who have been put in charge of the government machinery, the president and its cabinet members and others. As it is mandatory for budget to be ready at least 1 month before the end of the year. So the budget to be read at the Parliament must be ready 1 month before the end of the year. This notwithstanding, in election years, listen to carefully, because the discussion is going on and the objectives can come out with some of these things. Right? We are saying that it is the duty, or the Constitution mandates the president to present the budget a month, at least a month before the end of the year. Then, because of these issues, the Constitution actually recognizes the importance of this planning for the financial year in terms of revenue and expenditure for the nation. And as a result, managers of the economy or national economy must be mindful of this, because the budget must be presented at least a month before the end of the year. This notwithstanding, in election years, budget for the ensuing year could be prepared in those years because of uncertainty in the continuity of the sitting government. But when in those years, but even in those years, the sitting government is expected to prepare a 3-month budget for the ensuing year for parliamentary approval in order not to bring government machinery to a halt. These 3 months projections must, however, cover the basic revenue and cost items that would keep government machinery running, and not cover major projects or programs for the government. So this is very clear by the Constitution of Ghana that President must present the budget to Parliament a month before the end of each year. And that this is mandatory, right? So the management of the economy managers must be made sure that, but notwithstanding this provision, in the election year, the budget can be prepared within the year, the ensuing year, because we might not be, the continuity of the government might not be certain. Just like 2014, when Akufo-Addo government, or the Bawumia Akufo-Addo, the NPP government and NDC government went to pool. Before the election is in December 7th, so you cannot prepare your budget and expect to be read when election is already going on. So the actual budget for the year may be prepared in the ensuing year itself. Even that, the government in power must at least prepare budget to cover the first quarter, because this must be done in order not to hot government machinery or disturb or put on hold government machinery, because the government machinery has to run. Whether there's going to be change of government or there's not going to be change of government machinery have to go on. We cannot say that because budget has not been prepared, the workers are not going to be paid for the period that the new government has not budgeted for. So the government in power will prepare 3-month budget. So that was why Akufo-Addo government, the government prepared 3-month budget, and the first quarter budget was the one that was keeping the government going before the NDC government came with their budget. But in preparation of that first quarter budget, it's supposed to be only a budget for the recurring expenses like compensation and those things. It shouldn't cover major projects because you are not sure whether you are going to win power or not. So you cannot prepare budget for road construction, estate building, 1E, 1F, those things. No, it's only for government machinery, the employees. That is why when the Mama government or the NDC government took over, all those employment that the NPP did within that November, December, they consider it null and void because they think that you are not very sure whether you are going to win. So the estimate for paying additional workers, you cannot know where you are going to get money from. So it is not your duty. Once you are in the electionary year, prepare that budget, and it should cover for only those of people who have been employed only and those administrative expenses. Leave those new employment and then road construction and those things out. The new government will come and then now prepare their budget. Hope you are clear with me. So, hello, are you there? Hello.
Yes, please, Doc.
Yeah.
Okay. Right.
Yeah.
So we are saying that it's worth noting that even though the Constitution states that the president must present the budget to the Parliament, generally, the Minister of Finance presents the budget to Parliament on behalf of the president. So take note that it is the duty of the president to have presented the budget, but the president is so big to do so. So the Minister of Finance do present the budget on behalf of the president. Now let's look at the provisions on the budget. So this was the provision in the 1992 Constitution regarding the budget of the nation. Okay, look at who should present, the time of presentation, and in the year of election, what to be done. Take note of them. Then provisions on budgeting in the Public Financial Management Act. So the Director of Finance, the Director of Budget, we said that the Minister of Finance is in charge. He's supposed to prepare the budget, but he's assisted by the Director of Finance. So the provisions of the Public Financial Management Act actually places the following responsibility on the Director of Budget in the Ministry of Finance. So take note. You can be asked to state the responsibilities of the Director of Finance in the Ministry of Finance regarding budget. So the preparation of the annual estimates and the medium-term financial framework within the constraint specified in the government fiscal strategy. So the preparation of the budget is the responsibility of the Director of Budget at the Ministry of Finance. Though it is the Finance Minister's responsibility, but the Public Financial Management Act has placed budget preparation because the minister has a lot of role to play. He will actually do oversight responsibility, but the responsibility for preparation of the budget is in the hands of the Director of Finance at the Central Budgeting Department in the Ministry of Finance. So we're saying that the preparation of the annual estimate and the medium-term financial framework, that is the estimate for the medium term, it is the duty of this. And so the medium term means a period of not less than 3 years. but not more than 5 years. So medium term is a period between 3 to 5 years. The medium term financial framework, the medium term fiscal framework means an annual rolling 3-year period over which government plans fiscal policies and likely budget parameters to macroeconomic performance with fiscal results at an aggregate level. So the medium-term financial framework means an annual or rolling 3-year expenditure planning that set out the medium-term expenditure priorities and hard budget constraints against which sector plans may be developed and refined to match available resources. So when we talk of the medium-term medium-term expenditure framework and then medium-term fiscal framework, these are what they mean. The medium-term is a period between 3 to 5 years, and then when we talk of a medium-term fiscal framework, we are talking of the means framework. So you can explain, you can just look at that. Then we have another one, the second function as the director of budget, the preparation of the media budget review. Okay, so we have talked about the media budget review, okay, as the supplementary review budget. So media review budget and quarterly budget execution reports is the duty of the minister, the director of budget. So budget is released, or the government appropriation is released quarterly. So every quarter review has to be done by the director of budget, and this report must be done in line with section 29 and 24 of the Public Financial Management Act. Also, it has a responsibility of advising the minister through the chief director on all matters relating to the annual budget. So the director of budget advises the minister through the chief director on all matters relating to the annual budget, supplementary budget, and the medium-term framework. It is a duty of that director of budget. Sorry. Also, advising the chief director. He also, because in the ministry we have a chief director, we have the director of budget, and we have the chief director. So if you want to advise the budget, the minister, you advise him through the chief director. He advises him through the chief director. And also, he also can advise the chief director on matters relating to the classification of the budget and systems required to prepare the budget, and then perform any other function assigned by the chief director. So this is the function of the director of budget, conferred on him by the Public Financial Management Act. Then we talk of the fiscal policy principles. That is in section 13 of the Public Financial Management Act. And when we talk of fiscal policy, we are talking of monetary and fiscal policies. So monetary and fiscal policies play a key role in the socioeconomic development of every country. And when we talk of monetary policies, we are talking of policies that have to do with the creation of money or circulation of money in the economy. Fiscal policies has to do with government generating revenue and spending. Government income generating policies and then spending policies, right? So monetary policies are broad decisions regarding institution. So monetary policies are broad decision guidelines instituted by the Bank of Ghana and the Minister of Finance that are meant to regulate the supply of money in the economy. So take note the difference between monetary policy and fiscal policy. Okay, when we talk of monetary policy and fiscal policy in public sector, what do we mean? Or in public sector budgeting, what do we mean? So we are saying that monetary and fiscal policies play key roles in the socioeconomic development of every nation, and that monetary policies are broad decision guidelines instituted by the central bank central bank and the Minister of Finance that are meant to regulate the supply of money in an economic system. On the other hand, the fiscal policies are broad decision guidelines to regulate the generation of national income and control over government expenditure. Generation of national income and control over government expenditure. That is fiscal policies, right? This is section 12 of the Financial Management Act is designed to prefer certain basic principles to be followed by managers of state resources on the formulation and administration of state resources. They are meant for effective implementation of the budget, right? So we have the principal account holder, and then here these are the various heads of the government institution or covered entities. Remember that last we have talked about who a covered entity a covered entity is. A covered entity is any entity that actually procure or receive money from government and spend on behalf of the government. That's a covered entity. So the principal account holder and the principal spending officers of a covered entity will be accountable to Parliament for the performance of their function with respect to the implementation of fiscal policies. So according to the Public Financial Management Act, the principal account holder, and here is more or less the accountant, the financial controller, and the spending officer, the CEO of that particular entity, the two of them will be accountable to Parliament for the performance of their functions with respect to the implementation of fiscal policies. That's why at the end of the audit service or the auditor's report, the various accountants in the various public institutions, covered entities, and their spending officers have to appear before the Parliamentary Select Committee on Account or Public Account Committee of Parliament. Public Account Committee of Parliament. Recently, they finished their sitting. I don't know whether they have even finished their sitting, right? So take note. Then we have the fiscal policy shall be developed in a manner that takes into account the impact on the welfare of the current population and future population. And when we talk of the fiscal policy, we are talking of policies regarding generating of national income and policies regarding control of government expenditure. We are saying that the Act is saying that in formulating fiscal policy, this will be developed in line with in a manner that takes into consideration the welfare of the current population, that the current citizens of Ghana, and the future generation. And then the fiscal policy shall be conducted in a manner that avoid abrupt changes in the evolution of economic, macroeconomic, and fiscal indicators. So you cannot carry on the fiscal policy, or the fiscal policy cannot be conducted in such a way that it will bring a halt or it will bring an abrupt changes, that fundamental changes in the macroeconomic fundamentals of the economy. Also, management of public funds, asset and liability, including natural resources and fiscal risk in the country, shall be conducted in a prudent way. And I believe you understand what we mean by prudence. Prudent means that being economical, being what do you call it? Optimistic, rather than being pessimistic. Okay, be prudent so that you do not expect so much, or neither do you do as if we have everything at our hand. Okay, it must be done prudently. So we are saying that the management of public funds, asset and liability, including natural resources and fiscal risk in the country, shall be conducted in a prudent way. So you don't do it as you don't just spend anyhow, or you extract the resources anyhow. You just manage as if there is no tomorrow. That's what we mean, with a view to maintaining fiscal sustainability, because in all doing this, in managing public funds, utilizing asset and liability and the natural resources, you must done it in such a way that you must have a view to maintain fiscal sustainability, right? That's it. Then also, public funds means the consolidated fund. So when we talk of public fund, we mean consolidated fund, contingency fund, and other fund established by under the Act of Parliament. We have talked about that in section 5 of Unit 1. Remember that. Then we have the principles on formulation and implementation of fiscal policies. This is very important. You have to understand them, right? The principles of formulation and implementation of fiscal policies. So when you are formulating fiscal policy or you are implementing a fiscal policy, these are the objectives, principles and objectives, principles on formulating and implementation of fiscal policy. Remember that we have talked about what we mean by fiscal policy, and we have also said that the Act is saying that in implementing or managing these fiscal policies, you have to be done in such a way that you have to be prudent and then also have a view of maintaining fiscal sustainability. Therefore, we are talking of principles on formulation and implementation of fiscal policy objectives. Now, the fiscal policy objective may be defined as a target set for the implementation of the policy. So every fiscal policy will have an objective. So we said a fiscal policy objective may be defined as the targets set for the implementation of that policy. So if government wants to come out with a new tax system, or government wants to come out with certain expenditure, these are all fiscal policy. Now they do it with an objective. Okay, so we are saying that fiscal policy objectives may be defined as the targets set for the implementation of the fiscal policy, and they are the reasons for which broad decision guidelines for raising government revenue and controlling government expenditure are developed. So these fiscal policy objectives are the reasons, or the broad reason decision, or they are the reasons or broad decision guidelines for raising government revenue and controlling government expenditure. If government want to raise revenue or control any expenditure, it's for a particular fiscal policy objective that you want to achieve, right? So according to section 13 of the Act, that is Public Financial Management Act, the prime fiscal policy objective of government is to ensure, okay, so the Act, section 13 of the Public Financial Management Act says that the prime fiscal policy objective of government is to ensure macroeconomic stability of the country within the macroeconomic and fiscal framework. It is a progressive government. It is a prerogative of government to determine any other fiscal policy objective consistent with acceptable principles outlined in section 13. So these principles, or the objective that is outlined in section 13 of the Public Financial Management Act, which is to ensure macroeconomic stability of the country within the macroeconomic and fiscal framework. Any government, is a government prerogative, that is a government-owned decision to actually come out with any fiscal policy objective that is consistent with these particular provisions in the section 13. For instance, the theme for 2017 budget was given as sowing seed for growth and job. Maybe government saw that the previous year, the economy, that was when Akufo-Addo government has taken over from Mahama government, and they saw that maybe the Mahama government, there was no growth, and there was a lot of unemployment. Normally, the politicians, what they say. So they actually gave an objective as a policy, sowing seed for growth and job. And that was the basis for their budgets. So they used that one to come out with a budget. And of course, sowing seed for growth. It means that they are going to do a lot of things. They are going to spend on certain things that will propel the growth of the economy. And it is in line with the fundamental policy provision of the Act, which is about ensuring macroeconomic stability of the country within the macroeconomic framework, macroeconomic and fiscal framework. Okay, so sowing seed for growth and job. In other words, facilitate achievement of fiscal policy objective. The Act has prescribed the following principles to guide the setting of the objectives. So if you look at this, then the principles for formulation and implementation of fiscal objective include the following. First of all, sufficient revenue mobilization to finance government planning. So if you are looking at fiscal policy, one objective is to ensure revenue mobilization to finance government programs. You need to generate enough funds to meet government expenditure for the period. The next one is maintenance of prudent and sustainable levels of public debt. So you don't come for the fact that you want to do whatever thing, you just contract the loans or you put the government debt to an extent where it cannot be manageable. So the policy is that if you are coming out with any fiscal policy objective, one, you have to ensure maintenance of prudent and sustainable levels of public debt. So you do not increase public debt to an extent where it is not sustainable. Also, ensuring that fiscal balance, when calculated without petroleum revenue, is maintained at sustainable level over the medium term. And when we say fiscal balance, what do you mean? We mean the revenue and expenditure. So if you balance revenue and expenditure without revenue from petroleum, it should be able to maintain at a sustainable level over a medium term. So if we take away the petroleum revenue, whatever we generate as revenue from the government policy, and then expenditure we are incurring, when we take the balance, the balance of this one, the fiscal balance here should be sustainable over a medium term. And the last one is the management of fiscal risk in a prudent manner. So in the management of fiscal risk, and so when we talk of fiscal risk, we are talking of variations between the revenue generation and the expenditure incurrence. If the revenue generation and this are varying, they are fluctuating, then there's a fiscal risk. Because if at any point in time we are unable to, our revenue is not able to meet our expenditure, then we have a risk in there. So in managing of fiscal risk, so we are saying the management of fiscal risk must be done in a prudent manner. And the last one is that achieving efficiency, effectiveness, and value for money in the expenditure. So these are the principles. These are the principles for formulation and implementation of fiscal policy. So if any government is coming out with a fiscal policy objective, they should develop their fiscal policy objective considering the following principle. This was given by the section 13 of the Public Financial Management Act. Then we have the fiscal strategy documents. This one is section 13 to 14 of Fiscal Public Financial Management Act, section 14 to 18, talk about fiscal strategy documents. So this fiscal strategy document is a document designed by government that gives the broad roadmap. A document designed by government. It's a good document. We are saying that the fiscal strategy documents, according to the section 14, is a document designed by government that gives the broad roadmap for adjusting government expenditure and revenue generation in order to facilitate the economy's socio-economic development. So a document designed by the government that gives the broad roadmap, the broad objectives or the broad roadmaps for adjusting the government expenditure and generating revenue in order to facilitate the economy's socio-economic development. Let me just that is a fiscal policy document. Fiscal policy document. It is a document designed by government that gives the broad roadmap for adjusting government expenditure and revenue generation in order to facilitate the economy's socio-economic development. The act requires that the minister, here we are referring to the Minister of Finance, shall not later than end of April, and April, January, February, March, April, so that the beginning of the second quarter of each financial year, prepare and submit to the cabinet for approval a fiscal strategy document. The minister shall, on behalf of the president, and not later than 30th of May of each financial year, submit a fiscal strategy document to Parliament for approval according to Parliament determined program. So what we are saying is that this fiscal strategy document should be prepared latest by the end of April and submitted by the minister and submitted to the cabinet. Cabinet will approve of it, and by 30th of May, minister should submit this document to the Parliament. The document shall specify: 1, the medium-term financial framework, the medium-term fiscal framework of the government, an updated and comprehensive medium-term macroeconomic and fiscal forecasts covering current development and multiple projections, the medium-term expenditure framework of the government with resource envelope and overall expenditure ceiling, and then a statement of policy measures. A statement of policy measures the government shall implement in order to stay within the confines of the fiscal policy objectives, and then a statement of policy measures. That is a statement of policy measures the government shall implement in order to stay within, that's I've said that one. Then a comprehensive and qualified financial risk statement. Hello, over. Good evening. In fact, Mr. Khan, for now it's Nekan on Quechi. It says, man, this I can't understand that could my partner, and actually, yeah, but it brought up our Omania. And also over your eating. Okay. Yeah. That's it. I was talking about that. It's a record. It's a person. Now, what's looking in more when I was the guy, the person. Meanwhile, no bad way in see. All you guys can do that. Also, my woman be a man be on also auto be and my manager. Now I can say into what for a offended a way I'm up on we cook more now what I should feed. Personally, the more yeah. It's a kind of Oh, we try that for you. See, yeah, today. Also, there are some. There are body was looking for. Yeah, today watching for another channel. Obey me, yeah. It's the way was. So no, also no need cry. You know, say them okay can be 9,000 for me. Okay. 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 My mom familiar with invitation here, but next week I'm in. They are starting any invitation 4 weeks stretch, right? Or next week no bar, and therefore you can have them catch on. This week, yeah, this week. No, but come on, I will decline next week one. It's only 4 weeks. We'll start again in 4 weeks. Last week in the quite. This week in the 4 weeks. But I will the next week's I'll catch on there. Be on the agency. Oh, say you must work. Yeah, putting in see. Yes, someone. But me project maybe I will not be going there again. I will not be going up again. And this year, Tamale, because of my when Simukwa, you may fear accommodation. And number reason I don't want to maybe project to her. No, we so I'm recommendable. Oh yeah. So yeah. 2 apartments. Yeah. 2 bedroom flats. 2 bedroom. Or separate. Or separate. Just that be dividing. Okay. Yeah. The man I say. I want to be charged at 20. Yeah. Yeah, we were online. Oh, don't worry about it. Yeah. Sorry, my uncle called me. My student, are you there? Right. So we're talking about the content of the fiscal strategy documents. So please take note of the content of that. And then we are talking about the overview of the international private sector accounting, which also regulates the private sector accounting standard. Of course, Ghana has adopted the international private sector accounting standards, just that we have not fully incorporated. It's an adoption. We are the adoption stage. We have not fully incorporated it. However, this provision also regulates how the public sector budget has to be prepared. And so, since Ghana has signed on to the International Public Sector Accounting Standard, the regulatory framework for budget preparation in Ghana is not limited to only laws of Ghana, but also includes the International Public Sector Accounting Standard 24. in this session, you will have to, we will devote our attention to an overview of the content of the International Public Sector Accounting Standard 24, presentation of budget. So that standard is presentation of budget information in financial statement. The presentation of budget information in financial statement, knowledge of the content of the International Public Sector Accounting Standard 4 should be applied when preparing public sector budget. And so this was actually adopted effectively 2009 and thereafter. So that's the objective of the standard. This standard requires a comparison of budget amounts and the actual amounts arising from execution of a budget to be included in the financial statement of entities that are required to or elect to make public available their approved budget, and for which they are therefore held publicly accountable. So what he's saying is that this budget, this particular standard, the objective is that all organizations all nations that have adopted this standard must prepare the budget and the budget estimate and the actual amount. They should be compared. If you prepare your financial statement, you must have the budget and then the actual activity so that comparison can be done. The standard also requires disclosure of an explanation of the reason for the material differences between the budget and the standard. So if you are preparing the budget, you compare the budget with the actual, and if there are differences, the standard requires that you must offer reasonable reason or explanation for the differences between the actual and the budget. So the financial statement should be paired budget and actual, and then the differences, which are different variances, must be explained. That's what it's saying. Also, compliance with the requirement of this standard will ensure that public sector accounting discharge their accountability obligation and enhance the transparency of their financial statement by demonstrating a compliance with the approved budget for which they are held accountable. So what you are saying is that if they apply this concept, this standard, definitely it will enhance accountability, because you are comparing your budgeted with actual. So we'll be able to see whether you are complying with your budget or you are deviating from your budget. And the difference, which is the variance, will also have to be explained. This actually ensures transparency and accountability. The scope of this standard, any entity that prepares and presents financial statement under the accrual basis of accounting shall apply this. So if any government or any country that have adopted the International Public Sector Accounting Standard and are preparing their financial statement using the accrual basis, will have to apply this standard. That is the scope. This standard applies to public sector entities. So here we are not looking at, because International Public Sector Accounting Standard does not apply to private entities. It's only applied to public entities. So the scope is that the standard applies to public entities other than government business entities. You know, government business entities, they apply the International Financial Reporting Standard, because for them, they are set up to operate for profit. And once they are set up to operate for profit, they are to manage their businesses and to operate for profit. They apply the International Financial Accounting Standard. However, any entity that is public sector but not government business entity will have to apply this, which are, so that is it. So the definition that you need to understand regarding this document, we have original budget. And in this standard, original budget is the initial approved budget for the period. So under the International Public Sector Accounting Standard 24, one definition that you must understand is what we mean by original budget. So original budget here in this standard is the initial approved budget for the budget period. Then we have the approved budget. The approved budget means the expenditure authority derived from laws. The approved budget means the expenditure authority derived from laws, appropriation bills, government ordinance, and other decisions raised to the anticipated revenue for received for budgetary period. So that is the budget approved by government, the parliament. So approved budget is a budget approved by parliament, and therefore it means the expenditure authority derived from the laws. Once it is a law, the parliament approved, means that it's the authority to spend that is derived from the law, okay, or appropriation bill. Because appropriation bill means that it is a bill that has been approved by parliament. Okay. Then we have final budget. In this budget, final budget is the original budget adjusted for reserves. Adjusted for reserves, carrying over amount, transfers, allocation, supplemental appropriation, and other authorized legislative or similar authorities. Changes applicable to the budget period. So final budget is the original budget, is the original budget that has been adjusted for any changes in the period. That will then become final. Then summary for this standard, that an entity shall present a comparison of the budget and actual amount as additional columns in the primary financial statement, only where the financial statement and the budget are prepared on a comparable basis. So that is the summary, the requirement of the budget. And also an entity shall present a comparison of a budget amount either as separate additional financial statement or an additional budget column in the financial statement currently presented in accordance with the International Public Sector Accounting Standard. The comparison of the budget and the actual amount shall present separately for each level of legislative oversight. So the original and the financial budget, the original and the final budget, the actual on the comparable basis by way of notes, or these are options that can be followed. Then all entity shall present an explanation of whether change between the original and the final budget are consequence of reallocations within the budget or of other factors, right? So you can just look at the content of that one. Then we come to Section 4, and we'll just discuss some section, just some part of Section 4 here, and because we are closing at 10, so we can just finish with this one.
10.
Hello.
At 10 o'clock.
Yes. No, you want us to close?
Yeah, so we need to prepare for tomorrow as well.
Tomorrow. We'll go to work tomorrow.
Okay, so then we have ended,
Yes, though.
Okay. Yeah. So wherever we get to,
yes,
your exams. I will not stress myself. Wherever we get to, you do your exams, okay?
Yes,
all right, though.
All right.
yes, sir.
Thank you very much.
I am stopping. Thank you very much. You. Okay. Thank you too. All right. So, God willing, Saturday, Saturday when? It is 6 o'clock.
It's 7 a.m.
Saturday 7 a.m. eh?
Yes.
Okay, right. Whatever you say. It is the same code we are working for, so it's not my fault, eh?
All right. All right.
Yes, sir, no problem. No problem.
Thank you.
You're welcome. Thank you, sir.
Okay. So all the best. Saturday.
Thank you, sir. Yes,
Okay,
sir.
sir. All right.